morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at two of those stocks on the manufacturing sector, which may be referred to sometimes as vice stocks. We're talking about Angostura Holdings Limited as well as West Indian Tobacco Company Limited, or WCO, as it's commonly referred. Both groups would have reported improved earnings for their recently concluded fiscal periods of fiscal 2023. Let's take a look at how both stocks would have performed and what investors might expect in the coming months ahead. Turning firstly to Angostura Holdings Limited, or AHL, the group would have reported an earnings per share figure of 74 cents per share for that recently concluded fiscal 2023, a 4.2% increase from the 71 cents recorded in the prior comparable period. Driving that performance was a 2.5% improvement in revenue from 1.03 billion to just about 1.055 billion, 1.056 billion overall. Gross profits also up 6.4% from 477 to just over $508 million, and overall profit for the period improving from $145 million to just about $152 million, a 4.6% increase. So certainly good reading from a financial performance perspective. When we take a look at Angostura's revenue trends, we can see that the most recent performance continues a trend of increasing revenue over the past couple of fiscal years, albeit at a slightly slower pace, whereas in fiscal 2022, revenues were up a whopping 11.8%. In fiscal 2023, that was a more modest 2.5% again. However, the group did achieve record revenues again year on year with that $1.056 billion marker, of course, excelling or surpassing rather that fiscal 2022 level of 1.03 billion. When we take a look at operating profit margins and profitability in general, there was an improvement in Angostura's gross profit margins from 46.4% to 48.1%. Its operating profit margin also improved from 17.9% to 18.8%. And there was a modest improvement as well in its profit after tax margin, the all-important one for investors, from 14.1% to just about 14.4%. Certainly heading in the right direction, but a little bit below those operating margin levels of fiscal 2020 and 2021 in terms of that profit after tax margin. And that might be attributable, of course, to a highly inflationary environment over the course of fiscal 2022 into 2023, where the cost of goods sold, among other operating expenses, would have been notably higher. So at a price of $22.74, Angostura Holdings Limited is trading at a price to earnings ratio of 30.7 times, which is double the price to earnings ratio of the sector average of 15 times, and offers investors a dividend yield of 1.7%, which is just about half of the sector average dividend yield of 3.3%, which could explain to some degree why the recent earnings results have not been met with too much fanfare in terms of price movement or price reaction by investors on the Trinidad and Tobago Stock Exchange. So with that increased revenue growth in mind, some modest margin improvements, but of course keeping an eye heavily on those elevated valuations. For the time being, it seems that earnings will need to play some catch-up to justify the current price levels, and on that basis, Bourse is maintaining an underweight rating on Angostura Holdings Limited for the time being. Turning very quickly to WCO, the group would have reported an earnings per share figure of $1.10, which was a 5.8% increase from the $1.04 recorded in that prior comparable period, fiscal 2022. That is, revenues importantly were up 4.3% from $724 million to $755 million. Gross profits down marginally, 0.8% from $497.8 million to just about $494 million. Overall profit for the period was up 5.9% from $261.6 million to $277.1 million. Now, one of the major concerns for investors for WCO over the past couple of years would have been its revenue trend. And you can see here there would have been 3 years in which revenues would have declined quite significantly for WCO, from $935 million in that fiscal 2019 period consecutively to $724 million all the way into fiscal 2022. That seems to have been, or the revenue seems to have been stabilized in fiscal 2023 with a 4.3% increase, as mentioned, moving to that $755 million mark. And certainly that seems to have been a catalyst for investors and investor confidence. In fact, when we take a look at how the stock price would have performed post the announcement of these results, up a whopping 70% year to date in 2023. When we take a look at Whitco's margins, however, we can see that there's also been some decline over fiscal 2021 into 2022. Again, very similar in trend to Angostura, again, with those higher costs of sales and operating costs in general. However, there seems to have been modest recovery in that green line, the profit after tax margin figure from 36.1% to 36.7%. Some stabilization on the profit after tax margin or at the profit after tax margin level, simply providing some comfort to investors as well as we take a look at Whitco. And of course, importantly, Whitco being viewed traditionally as a dividend paying stock. That payout ratio continues to be fairly consistent within the 94 to 95% region, 94.5% in the most recently concluded period, with that dividend per share increasing from 98 cents to $1.04 for fiscal 2023. So certainly more comforting news for investors who have been enduring a painful time with holding Whitco, of course, for some time. But if you did buy at the beginning of the year, well, you'll be smiling and quite happy given that the stock is up 70%. So at a price of $15.19, Whitco is trading at a price earnings ratio of about 13.8 times, just below the sector average of 15 times, and offers a very juicy dividend yield based on its most recently released results and dividend declarations of 6.9% compared to that sector average of 3.3%. So with that increased revenue in mind, and certainly the trend on a quarter-on-quarter basis has been very positive for Whitco over the past 2 to 3 quarters, stabilizing margins, those very healthy dividends and relatively attractive valuations. Bourse is of the view that there is more upside to be had in Whitco based on those most recently released results. And on that basis, we are maintaining an overweight rating on Whitco, or assigning an overweight rating on Whitco at this point in time. But that's it for this week's edition. For more information, you can give us a call at 226-8773 or to Bourse. Email us at invest@boursefinancial.com. And of course, you can check out our website where all of our research is absolutely free at bourseinvestment.com. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.